Introducing a new era for discerning Australian investors. Brought to you by Ausbiz and backed by deep market insight, professional analysis and a proven track record. Our focus is simple: to connect you with exclusive and compelling investment opportunities. Discover what's next at ausbizcapital.com.au. This program is brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.
Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us again here at Ausbiz. Let's get across what we've seen overnight on global markets. They were mostly higher. Germany's benchmark index touching a record high, boosted by a corporate tax relief package there. On Wall Street, US stocks ended mixed amid weak economic data, with investors remaining cautious ahead of planned tariff negotiations between President Trump and China's President Xi. Shares of Hewlett-Packard rose as demand for AI servers and its hybrid cloud segment helped second quarter revenue with profit beating estimates. Global foundries rose after the chipmaker announced plans to increase investments to $16 billion. Tesla fell as the EV maker's sales dropped for the fifth straight month in its largest European markets. And shares of cybersecurity firm CrowdStrike slumped after it forecast quarterly revenue below estimates. And Dollar Tree fell heavily as the discount store operator forecast second quarter adjusted profit could fall as much as 50% from a year ago due to tariff-driven volatility. Well, the US services sector contracted for the first time in nearly a year in May, while businesses paid higher prices for inputs. And US private payrolls increased much less than expected in May, adding 37,000 jobs. Meanwhile, the Fed's Beige Book reported that activity declined slightly, with delayed hiring said to be widespread. It also said expectations of future increased rises in costs and prices were widespread. Meanwhile, US-European trade talks are progressing, according to Europe's top negotiator, while pointing out that the doubling of US metals tariffs is not helping. And ahead of planned talks between President Trump and President Xi Jinping, Trump has taken to social media labelling the Chinese leader extremely hard to make a deal with, suggesting expectations of a resolution in trade differences between the world's two largest economies could prove to be elusive. And Canadian Prime Minister Mark Carney has warned that his government is preparing reprisals against the US in response to the imposition of tariffs on metals. This as the Bank of Canada left its policy rate unchanged at 2.75%, as expected, and indicated that there could be a need for further easing, but for now the bank's proceeding cautiously given both upside and downside risks to inflation. US Treasury yields fell sharply in response to the weaker than expected labour and service sector data. The 10-year was down around 10 basis points to 4.36%, the 2-year at 3.87%. And evidence of a weakening US economy sent the US dollar lower across the board, the Aussie trading at 64.9 US cents, and Bitcoin trading just below 105,000 US dollars. Oil prices, they've fallen on a larger than expected US gasoline and diesel inventory build as OPEC Plus plans more output and trade tensions cloud the energy demand outlook globally. Brent crude futures down more than 1% at $64 a barrel. The copper price rose more than 1%. Iron ore was down around 1% at $95 a tonne. And gold has been supported by a softer dollar and weak US data, as well as mounting economic and political uncertainty. Spot gold up around 0.5% at $3,375 an ounce. Let's get across what's moving US markets. Ira Epstein joining us from Linn Associates. Ira, welcome back. Let's start with that latest data. Are there danger signs ahead for the US economy, do you think, particularly with what we've seen with private sector jobs?
Yeah, well, first, thanks for having me, Andrew. Today was an interesting day in that things aren't making so much sense. 2 days ago or so, we had the JOLTS report, and it showed that the U.S. added in the help wanted ads about 200,000 jobs. Yet we come out today and we see in the ADP that we're not getting that many jobs. But more importantly, it wasn't ADP because their numbers are all over the board. I was very concerned when I saw the service sector number fall, because if that number goes into contraction, that has been the bell in the US very stable. So when you see that slipping back, that brings up the bristles of my neck hairs. And I go, okay, is this going to be the slowdown or not? We're seeing the impact of tariffs to a limited degree. Everyone has to understand that the US dollar since February has fallen 10%. Therefore, while these tariffs are in place, and remember, they're moderated because the president said it that way up until July 9th, the impact of them isn't quite what it could be. They can get much worse depending on what the president decides to do or doesn't decide to do. If he lets them go up dramatically, then watch out on the dollar. Because if the dollar can get under the 97.5 level on the dollar index, the whole basket, you could drop another 6 to 10%. And if you do that, then I look for the gold market, the copper market, the silver market to take off to the upside, foreign currencies to gallop against the dollar. And the cushion in the dollar will be anything that we're importing will be what then? That's the question, because as the dollar goes down, our costs will go up. And is that going to be the defeating part of this? Very complicated right now. We're at the point where today, Wednesday, a number of countries were supposed to give their best effort foot forward as to what they want to do on tariffs. And from there, the president's got to make his decision. To date, one deal has been done, the UK, and that's not a done deal. It's a memorandum of understanding. Let's see where we go with all this.
Yeah, given that, Ira, do you think perhaps the signs of a breakthrough in trade negotiations are looking a little ominous? I mean, even the president, as I mentioned there himself, saying the Chinese leader is very hard to deal with.
You don't know. Remember, Trump sets you up. He tries to get you wrong-footed, so he's right-footed. We never quite know what is going on. What we do know is China has the world over a barrel with these rare earths. You can give all you want and sign all the presidential proclamations you want to get the miners going in the deserts and wherever these rare earths are in America. How many years is that going to take? It's not an overnight affair. So we desperately need these. We're hearing that the auto production lines could come to a halt, plane production can come in, small engine manufacturing. So this is a very important event. And yes, at some point there has to be a negotiation that sets in whatever's going to set in. And I think the president isn't giving us the full truth.
Do you feel as though he's going to stick with those steel and aluminium tariffs? As I mentioned there, obviously Canada not pleased, looking to retaliate.
You're talking the taco trade, which is T for Trump, A for always, C for chicken, O for out. Taco trade. And that is a big question. Canada can talk big. They need us really bad, but we need everybody. And there's going to be a point where the Trump administration has to come to a term and say, it's done its job. It's got a deals done. They're as good as can be done at this point in time. Obviously, if I'm a politician in the European Union, in Canada, in Mexico, you've got to decide what's the stance you take as the president bullies you. And obviously, politics being politics, they say one thing, but behind a closed door, you never know what's going on.
Ira, what's your expectation as far as earnings are concerned? I was just mentioning there, Dollar Tree, that fell heavily. So that discount store operator forecasting that that profit could fall 50% from a year ago. I mean, this has got to affect those earnings going forward.
Let's understand the nature of their business. They're called the dollar store. So what they're getting in aren't American goods. They're goods from Vietnam, Malaysia, China, wherever it is that they are getting to a certain degree going to have to raise their prices. They're probably going to have to go to the $2 store name. It wouldn't surprise me at all. Other retailers, we've just gotten through a slew this past week of retailers. Some are doing very well, others not so well. It depends on their price point. It depends on the marketing strategy. Obviously, you've got to worry on the upper end. people that have money have money. They want to buy things. At the lower end, when you take a good from $1 and it goes up 30, 40%, all of a sudden, is that person going to buy that good? Well, that's the story that Dollar Tree is basically telling us right now. So we're caught in that. And this was obviously all caused by President Trump as part of his grand scheme. You saw today that the budget office came out and they said that the deficit that's created by this won't be the 3.6 trillion, but something closer, I think, to 2.4 trillion by his plan. And of course, if you read the American newspapers, the Republicans are saying they know it's going to work, and the Democrats are going, it's even more debt. And why do you believe the CBO office anyways?
Meanwhile, Ira, how are you looking at those commodity prices at the moment, in particular oil? You mentioned gold there. Are you upping your exposure there?
Yes. In the gold market, I like gold. I'm liking silver. I want to come in on silver on breaks. Copper, obviously, you saw what happened in copper in the Republic of Congo, the Ivanhoe-owned mine there that is partly owned by China as well, lost production maybe to the end of the year, and that'll be 80,000 to 240,000 metric tons, which gets rid of a lot of the surplus that they thought they'd have this year. As for oil, I'm not in the bull camp, but I'm not in the super bear camp because we're in the middle of summer. Anything that the Saudis increase, they can use domestically in the other countries in the Middle East in order for cooling and energy needs. But the Saudis today said they want to continue production with these increases right through year end today. That gives me an idea that we're looking at a market with a top. And if the stock markets of the world even remotely stumble because of earnings and all that, then you're going to look very hard at the current price of oil and think that's substantially too high. You're at a real tricky time. You've got the jobs report coming out on Friday. All eyes will be on that in the United States.
Ira, thanks for joining us from Linn Associates.
Thanks for having me.
Let's return to the local market. We're expecting a pretty flat opening. As you can see, look, just down 1 point as far as SPI futures are concerned. So we're looking for some direction as the morning unfolds. And we'll do that when we get going in just a couple of minutes' time.
This program was brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.